Have you ever walked down your local high street, looked at the boarded up windows, and felt that creeping sense of unease? You know the feeling. You're tightening your own belt, watching the price of a weekly shop climb higher and higher, while your pension and savings feel like they're shrinking in real terms. We used to think the discount stores were the safe haven. When times got tough, we went to the pound shop. But here is the spine-chilling reality that hit the headlines in June 2025. Poundland, a company turning over billions, was sold for just £1, less than the price of a chocolate bar, less than a bus fare. If a retail giant can lose 99.9% of its value, what on earth is happening to the British economy? To understand this, we need to step away from the confusing stock market jargon. Imagine someone offers you a Jaguar for £1. You'd snap their hand off, right? It looks shiny on the driveway. But then you get the keys. You realize the engine is missing. The MOT is 5 years overdue, and there's a glove box full of unpaid parking fines worth 50 grand. Suddenly, that £1 coin wasn't a bargain. It was you signing a contract to take on a disaster. In economics, this is called a liability transfer. The price of a business isn't just what it sells, it's what it owes. Let's simulate this. Picture a retailer, Bargain Brits. For years, they chased growth, opening stores everywhere. But then the perfect storm hits. First, the energy crisis triples the cost of keeping the lights on. Then the government hikes the living wage. Suddenly, paying 16,000 staff becomes incredibly expensive. But here is the trap. Because their brand is cheap, they can't raise prices like a high-end supermarket. Fast forward to June 2025. The owners realized the cost of running stores was higher than the money coming in. They didn't sell it to make a profit, they sold it to stop the bleeding. So what now? The new owners are restructuring specialists, polite speak for cutting costs. We are likely to see a wave of store closures. The era of stack high, sell cheap is hitting a wall. This brings us to a difficult reflection. We often focus on revenue, the money coming in. But the Poundland story teaches us that revenue is vanity and profit is sanity. You can have billions passing through your hands, but if your debts are higher, your true value is zero. Ask yourself, are you building real equity or managing a lifestyle that costs more to run than it's worth? It's time to check the engine, not just the paintwork. Subscribe for more clarity in a chaotic world.